Beat, everybody. Happy Thursday. How you doing out there? I'm going to mess up today. I can already tell. I'm just so excited. What a great day. We're financial advisors here at Jazz Wealth. I'm Dustin Tibbetts, financial advisor also at Jazz Wealth. And this is a quick show that we do. It's called The Closing Beat. It's just a quick stock market update show. We'll go over the good, the bad, and the ugly. Lots of good to talk about today. We got a lot to talk about today. And also, one of the things, if you just can't get enough of us, right, and you want to come back later, we're doing our normal Thursday night class that's normally just for customers. We're going to do it for the public as well. So we'll be back here at 8 o'clock live on our YouTube channel, Jazz Wealth Managers. It'll be a public video. We're going to go over market decline statistics. And if you like some of the geeky stuff that we share with you here, you'll love some of the things that we share with our customers. So we'll give you kind of a taste of what it's like to work with us if you were to be a client and be here on a Thursday night. And of course, I'll stick around and answer your questions right back there in the speakeasy, actually. You can kind of see it off to this side. So hope you'll join us for that. We're also playing a game. It's called Guess the Dow. You know the drill. Go take your guess. Where do you think the Dow is going to close? If you're the closest without going over, we'll send you a $100 gift card. That's enough. That's all I have. Let's talk about the stock markets today. Up 220 on the Dow. You got 26 on the S&P and 63 on the NASDAQ. Did you see what happened? So this has been a great, how do you not love this stuff? Just soak this stuff up, man. So this has been a great couple days to kind of understand how the markets are behaving and what investors are looking for. So a lot of times people will try to sell you a strategy or tell you that they know more than the market and everything. I like to focus on what is everybody thinking? What is everybody going to do at a certain point? Is there a lot of strategies going to happen there or trigger at a certain point? Is everybody waiting for something? And you sort of sift through all the mess and you try to find what everybody's really thinking. And yesterday, if you saw our closing beat, was just perfect. We talked about the Fed day yesterday. It behaved exactly as literally exactly as the stats for Fed days behaved. Just perfect. We broke it down for you the day before on Wednesday. So if you want to do some like binge watching, watch Wednesday, Thursday, and today for sure on the markets there. Well, we talked about yesterday the market's sitting at highs, right? So we've got, here's the S&P on the screen. You had the market sitting just under highs, and we were talking about needing a catalyst. For the last couple of days, we've been saying you need a catalyst to get the markets to new highs. We thought maybe earnings, if there was so many last-minute exciting earnings news out there, that didn't do the trick. We said, well, everybody must be waiting for the Fed. We can't rule them out because they came out yesterday, made their decision. After yesterday, the market's behaving exactly as they should. We then knew we were able to kind of see in what investors are looking for. So it was a great example to say, look, investors are focused on trade purely. And if I know that, you know Washington knows that. I used those exact words yesterday. And today, they came through. So we said, look for some comments out of Washington for trade discussions, whether good or bad or whatever, to get people to try to buy this new high. Well, today we got that. There was a tweet by President Trump earlier this morning. He said exactly, getting very close to a big deal with China. They want it, and so do we. Later in the day, we found out, of course, that, well, that actually started the move to highs there. But as we faded back throughout the day and people said, yeah, he said this before, we don't believe him. Then we got word that there was actually an agreement in principle, was the key word there. And President Trump now has the ability to sign off on phase one of the deal. Doesn't mean he's gonna. Right? It just means it looks like phase one is basically done, pending his approval. So that was enough to send the markets to highs. Now it shows that that's the catalyst everybody was waiting for. And so we finished up at highs there. The S&P looking good, moving to all-time record highs. Just so exciting to watch if you watch the past couple of days. I love getting into this stuff, man. NASDAQ did the exact same thing. Good day for that one. And the Dow poked up to new highs. I don't believe it closed at record highs, though, if you were following along there. Now, that was good that we had that today because we had weekly jobless claims come out. They were not very good. So I'll dive over to that real quick if it happens to be on the screen. Yep, so far so good. No mess-ups yet. Who's taking bets? Here's the initial jobless claims. It's a weekly number that comes out, and it had been hovering historically at lows. I'm going to zoom out here. Well, let's go all the way out. Here's as far back as we can go into the 60s. We've been hovering near lows. We've talked about this every single week. Well, this week, jobless claims spiked rather sharply. There's some seasonal things in there, and people will be able to say, well, Thanksgiving came late, and so that was part of it as well. Nonetheless, we had jobless claims higher. That could have been a negative headline should we had nothing else to focus on today, but we obviously had the trade to focus on. So we hit the highest level that we've been in 2 years here on jobless claims. Not a great sign. And also, if I could zoom back in real quick, we've been stuck inside of this range. I'm going to zoom out just a little bit. We've been stuck sideways in this range. We have now broken back above it again. We did that earlier in the year. We talked about over here where we broke above this range a little bit. But all in all, we're coming up off the lows. Now, to be fair, this is out of all the weeks of U.S. jobless claims, if you rack up all of the weeks of the year and you go, which is the most volatile week? Meaning, which week has the biggest surprise to the upside or the downside? It's this week, right? So, well, last week's, but we get the news this week. So this is actually the week of the most volatile jobless claims number. So basically that's following along with the statistics as well. Sharp uptick there. So we would have had a chance to focus on some negative stuff, but all in all, that was pretty cool. We got to focus on the trade there. Let's talk about the sectors, do our sector breakdown here for the day. We'll go back over to the charts. He's still doing good. Okay, let's take a look. You got semiconductors hitting new highs. We talked about this 2 days ago, the exposure of companies to the to international revenues. We broke down the different sectors. We broke down some individual stocks. I pointed out a lot of these are in the semiconductor space, went through a bunch of names for you on Wednesday. And today you get the semiconductors just blasting off almost 3% higher. That's 2 days in a row that it's gained over 2%. Just amazing. Hit these new highs. Now, that puts it up quite a bit for the month. I'll share some stats with you later on what to expect on the semiconductors as an index going forward, because I know a lot of you have said that you're very heavy in this area and you want to know a little bit more. So I'm going to go over some of the stats for that here, some geeky spreadsheet stuff in just a little bit. Financials also higher. You know you need the tech, you need financials and you need semiconductors in order to get the markets to move higher. You had both of those today. Financials up 2%. If you dig in there a little bit, some of the bigger names, Bank of America up 3%. JP Morgan, oh, there we go. We happen to own Bank of America. JP Morgan higher about 3%. Some of your leaders in there. Now I'm getting a little concerned that these are going a little too far too fast, right? I'm going to put out a letter to customers this weekend. We do it every week. It's called Notes from Jazz. It's just kind of a recap of the week and some fin tips in there and kind of an overview of the markets and where we're at, and try to teach you something new as well. We're going to cover the financials in that Notes from Jazz here this weekend. But banks looking really good today. So obviously that's a good thing. If you go over to regional banks, there were two areas that we talked about over the last couple days as hinting at breakouts. You had regional banks and you had the retail stocks. They both broke out today, but regional banks stood out as the better performer. You have any idea why? You can see on the chart the retail area there. We talked about this breakout over these highs, needing just some catalyst to get it going there. We also talked about the regional banks here. We drew the line to kind of show you the ceiling overhead of what it was looking for. We broke above that. Good volume today, and we closed near highs. There's a reason why one looks better than the other. And it all stems down to risk versus reward. Right? It's as simple as that. If you have multiple stocks to choose and you're like, well, I can buy one stock. Which one am I going to buy? You narrow it down to 5 or something, let's say. And you've got money to buy one stock and you're just trying to figure out which one's the best. Your next decision is to say, well, which one offers me the greatest potential reward in exchange for whatever risk you're taking? Well, when you compare the regional banks to the retail, let's say, for example, you were trying to choose one of those two, you can very easily see that if you were to buy the breakout and believe that that was going to happen, you have clear skies above. You have nothing to stop you here in the midterm, which means there's well, I won't say unlimited, but there's a larger potential profit if this thing does continue as you believed, versus looking at something like retail. You go, okay, that broke out there. It's a little sloppy, but if it breaks out and continues, where's the next area of like a ceiling, a little resistance there? You look back over here and you go, well, that's a small window. So I've got to buy it here. I've got to expect that maybe the next trouble area is going to be up here. Tiny window. If I'm going to take some risk on a particular sector, then I'm going to look and see where can I go to get the biggest reward. And that's exactly why you see there's a difference between those two today. So that's kind of your a little bit of a technical lesson of the day. I hope that helps you there. So oil a little bit higher today, just chopping around inside of a mess there. Not a whole lot to kind of talk about in that case there. Some of the other areas that we said were sort of sloppy, looking for their catalyst. You've got tech, XLK we'll use to see that. Broke out to new highs, looking pretty good there. You got basic materials, obviously the biggest sector that's has the most exposure to overseas revenues and obviously wanted to see a trade deal. That broke out to new highs as well. Got its catalyst. You have industrials obviously in there as well. Not quite up to highs, but very, very good day for industrials, up 1%. Looking pretty good there. Some of the oil service names and oil explorers. OIH is a sector of the market there, continuing to come off of its lows. I know a lot of you are looking for that. XOP as well, also coming up off of lows, still very much beaten down, a very sort of tough area there. If you're looking inside of the XOP and you're saying, that's starting to get interesting to me, show me some of the stronger names inside of the XOP or some of the oil explorers. You got Phillips 66 back down to the 50-day moving average. These are not recommendations in any way, just trying to point out some of the stronger names that aren't floating around lows. You've got Marathon Petroleum up 3% today, right off the 200-day moving average, so kind of a technical area there. And you've got Valero, also one of the other stronger names, and these are in the top 10 of the holdings for the XOP. So if you want to look it up, you'll find that those are the case as well. Now, if you say, well, I like this weakness in energy and sort of the explorers, but I like bottom picking, right? I'm one of those really serious contrarian guys. You've got Concho Resources, CXO is the symbol, coming up off lows, looking very similar to the XLP. If you're following that. Continental Resources, been weaker than some of the other names, but also coming off lows there. And if you like, Marathon Oil coming up off lows there as well. So just wanted to give you a little glimpse of both sides of things if you're looking in that space. Seems like I get the feeling some of you are focusing in that space. Now, with the trade news today, you got bonds moving back towards lows. Big spike in interest rates today, which is okay for bonds here. We've kind of highlighted these two lines being the known trend areas. Granted, it's in a downtrend, but moving back down towards this area would be okay. That, of course, represents a spike in interest rates. With the trade news that you had today, that's the spike that you have, very strong volume on that, and that hurt your REITs. REITs were broke below the 200-day moving average today. There were our two lows that made new 52-week lows today. They were both REITs, just hit by rising interest rates today. And then utilities, not as bad, but down on the day as well, going to be one of the negative sectors of the market. XLU is what we use to kind of focus in on that. And that's only the half of it. We've got a lot more to cover here. So that's the sector breakdown. Let's move on to some individual stocks here, talk about what's going on. You got Delta Airlines in the news. Good little spike on that one, about 3% on the day. They basically confirmed their guidance going forward. Very strong full-year guidance towards the upper end of the range, if you're following along. For fundamental investors, we look back here. Delta's currently trading at about 8 times new 2020 estimates, right? So if you're looking at their new guidance going forward, it's trading at about 8 times forward estimates there with their new guidance. And that's still, if you look over a 5-year time period, it's about 10% discount overall. So from a fundamental perspective, if you're looking for something that's maybe not super overvalued, you're getting at least a little discount price-wise, not technically, but price-wise for Delta. Also, American Airlines took the 737 MAX off of their schedule all the way through April, I believe was what I saw on that one. By the way, Delta Airlines sort of snuck this in there at the end. They bought a minority stake in Wheels Up, a little private company that do little private jets and turboprops and stuff. So they made mention of that in their investor day as well. Gaming stocks were higher today, 10% for Wynn. You got MGM higher 1.3%. Las Vegas Sands, better performer, up 5%. We happen to own that one, so we're happy with that one as well. President Xi over in China said, you know what, we've got to take Macau, which is, I don't know, it's had its ups and downs, right? I mean, we could make an argument more to the downside. But over in Macau, their gaming center, over in China, their gaming center, Macau, President Xi said, you know what, we got to diversify that area. We can't have it all be gaming. We're going to get some fintech in there. We're going to get some of the bigger financial companies in there. That's a boon for that area, right? Because it means that becomes a more diversified small economy over there versus just saying, okay, we're betting everything on gaming. It's kind of like Las Vegas. Las Vegas, obviously known for their gaming, but they get a lot of revenue from shows and other attractions and things that bring tourism in as well. So really smart move by President Xi over there, of course, in China. Okay, that's what we have there. Your gaming stocks higher on the day. And then the gaming providers were higher as well. Less popular, but they were in there. 2% higher on Starbucks. They got an upgrade from JP Morgan. They say this thing's going to 94. They had previously assumed it was going to 90. They raised their target up to 94. They said they have new confidence in management overall, and they're positive this thing is headed towards 94. Their words, not mine. General Electric snuck a little 4% rally in on you there. UBS upgraded them today. That makes it positive. That makes the stock positive for the month. It is now up 55% year to date. Did you know that? seemed like a quiet little rally that kind of got out of the way for General Electric. They're really working hard over there. Peloton was lower on the day by, let's call it 3.5%. Citron Research is a known big short seller. They look for the weak stocks there and they try to find great short picks. That's kind of their shtick over there. And they basically said, hey, this thing's going to $5 a share. They call that talking your book because they have a short position. Nonetheless, it puts the stock a little bit lower on the day. They say $5 a share. What do you think? Southwest Airlines, unfortunately, only added about 1% on the day. It was higher to start the day, and on the news that they had reached a deal with Boeing to as a sort of a settlement for having these planes be grounded, the 737 MAX. And Southwest Airlines said, you know what, we're going to share some of that with our employees. They're putting $125 million into the profit-sharing program. What they did is basically went through and said, look, if these planes were in the air, this is the amount of money that you guys would have likely made and participated in with the profit sharing there. So if you work for Southwest Airlines, you got a little boost in your profit sharing program there. It's good. Good company. Facebook was lower by 3% on the day. Wall Street Journal reported that the FTC is considering a preliminary injunction against the company over how the applications interact with each other. Instagram, WhatsApp, and Facebook, of course. They plan to bring that action as soon as January. Not good news for Facebook. And so the stock was down about 3% on the day. Restoration Hardware pulled back a little bit more today. It was down 5.5%. It's a volatile stock. You got to know this is a volatile stock if you're playing along here. The CEO basically was reported, it became official that he sold 500,000 shares of the company. It's good timing if you're the CEO, getting top dollar there for them. So looking pretty good there. There may be a few other stocks we could cover along the way, but let's move on for now. 73.4% of the S&P is above the 50-day moving average. We were at 67.9% yesterday, so obviously a nice uptick there given the market's move today. Did good. What's really impressive is 81 stocks made new 52-week highs today. Only 3 of them finished in the red, so really, really strong day for them. We kind of did a different breakdown here today. There were 60 names that gained 1% or more. A lot of those are going to be in the financial space. Capital One, there you go, at highs. PNC Bank at highs as well. Huntington Bank going into the regional space there, up 2.5%. Morgan Stanley was one of the mix as well, of course, JP Morgan, and et cetera. And then I want to point out UNH, a little tight breakout here at highs, just maybe a little overextended, but attempting to make the next move there, added 1.11%. There were 15 out of the 81 names that gained 3% or more. You might be able to guess, but these were in the semiconductor space. Advanced Micro Devices, AMD, up 8% on the day. That was the better performer of the group. Microchip up 4%, hitting new highs as well. Take a look at where that's breaking out over this entire range. So you've got a series of equal highs, but a series of higher lows, right? Higher low, higher low, higher low, higher low, and new breakout there for the semiconductor microchip. Couple other names not in the space. United Rentals, you might be familiar with the name. That's a new little breakout at highs. Very sloppy though. And Black & Decker, there you go. Stanley Black & Decker sitting at highs there, added 5% on the day. There were only 2 new lows that we talked about earlier. You had Ventas, that's a REIT, hit new lows, has been on the list every day this week. Simon Property also broke to new lows as well after holding these lows for a while. What do you have there? Got to take a look. You got a series of lows. Everybody knows where they're going to bail out if the stock breaks. It's right under this low, about 145. Notice that when it did break through that low, you got a big swift push lower. Those are called stop losses. Those stop losses all triggering, you could tell by the volume in the background, as people finally giving up on Simon Property Groups, likely taking a little tax loss, sort of harvesting, I guess, tax loss, locking those in for the end of the year. So sell your losers and add it to your winners. Okay, semiconductors had a 6% gain last month. Obviously, they're doing well this month. So we said, well, what about the semiconductor index as a whole? What happens after it has a 5% gain or more in a given month? So let's go and take a look at the data we got. Here is the last I think it was 22 times that the semiconductor index had gained at least 5%. So if you look at the spreadsheet here, these are all the gains representing each month, and here's the dates, the months that they happened in. Then we wanted to post what was the performance going forward. So you can see we gained 5.93% in October. We're already, as of November 30th, we were up about 4%. You can kind of see the breakdown here. The biggest pullback was 16% after an 11% gain. The biggest gain was an 8% pullback after a 5% gain. So when we first did this, we said, okay, well, that's interesting, but there's a lot of gains that are well over 5%. The average gain is actually negative 0.44%, so it gives you an idea that, all right, when we have a 5% plus gain, the bias has to be to the downside at least a little bit, and 50% of the time was the next month profitable. So that doesn't tell you anything. So we kind of looked at it and said, well, all right, that's like a wash, right? If it has a 5% gain, there's a 50-50 shot that it continues higher next month or pulls back. So what we did is we took the data and zoomed in a little bit further, and we said, look, what if it goes over 8% in a given month? What's the performance look like then? So on the screen here, you've got, this is the same index. What happens if it now has a 1 month gain of 8% or better? So we took out all the 5, 6, and 7s. And here's the breakdown of that. You still have your biggest loser was that May time period, lost 16%. And then, of course, the best gain was now in February of this year, 6% after gaining 10%. But here's what happens now. Now, when the index is up over 8%, now you've got less of a shot of being profitable. So it tells you there's an extreme in the semiconductor space, right? News can drive you around, trade news, all this stuff. This goes back to 2013, I believe, in total. There's things that can drive you around. However, when the sector gets too far, too fast, being inside a 1 month period, it tends to pull back an average of about 2%, which is right here, 1.95%. It's only positive 38% of the time. So it lets you know that 5% is pretty acceptable. You probably wouldn't take much action, but if you happen to be a sector-based investor and sort of active, you happen to see something over an 8% gain, you might want to consider locking in that gain using a trail stop or something like that. Because the odds are against you that the next month is actually going to be positive. The one key to that would be, you notice here, if it is positive, you missed out on a decent gain. That makes it tough. This was kind of fun to go through. You got a 12% gain, you're thinking, all right, I'll lock that in, I'll walk away. You missed out on about 6%, right? You got an 11% gain, that one hurt, but other than that, it really didn't hurt too bad, right? So it's kind of interesting study there. Only one time was it positive by less than 1%. Going into the next month after having an 8% gain. I don't know if any of this matters to you. Just something I thought would be fun to put together. Doesn't take us very long, and kind of stuff I like to share with you. So there you have it, the semiconductor stats for 5% plus gains and 8% plus gains in a given month. There you go. I feel like I've said a lot. All right, so looks like Adobe was higher after hours. They reported earnings. Remember, they beat 89% of the time on earnings, 82% of the time on revenue. The stock is trading at about $13.13 at the moment, which if I put it up on the chart there, that's going to put you almost back to new high. Yeah, that's basically new highs. You can see it's kind of stopped right here at this prior high, give or take a little bit. Into that. Remember, we talked about this yesterday. They had lowered guidance the last 2 quarters. That helped them lower the bar to kind of push things higher for them or help them there. So interesting to see on Adobe. Looks like it's going to gap higher to start the day tomorrow. Okay, I've said enough there. Sure. Just go do what you got to do. I've said enough there. I'll take your questions if I happen to be able to answer them. And we'll see what we can do here. So let's go from there. Yeah, T-Mobile was in, or John Lagarde was at, he was making his case today. Did you see what he wore to that, by the way? He's a cool dude, man. Comes walking in with his jacket. It's got T-Mobile logo on it. All the people around him have T-Mobile logo on it, as if it's like a subliminal, like, T-Mobile. That was interesting. Hey, Halcyo. I should be doing Kramer's job? No, I enjoy having my hair. That guy works harder than anybody. I mean, he's got a great team, of course, but holy cow. That guy got a brain right there. That's it. I have notes. I cheat. Maybe he's got a teleprompter, but still, it is what it is. You had a stop loss for UNH, and you got rid of it. So then it broke to highs. Now you're a little frustrated. Well, it's okay. I mean, you hopefully had a good run there. I hope you didn't buy it all the way at those highs after being so extended. So if you had a little bit of a profit loss or profit trail put in there, that's not bad. You'll find another moment. You will have another moment. Cool. What do we think about McDonald's? It's trying. I mean, you never like to see a stock that falls off of a cliff and then struggles to get up. You like an immediate snap back. When it starts trading sideways like this, it's got to have you concerned. I would say as the days pass, you raise the number that you're going to get out if it falls. And then a couple days pass, you raise that number again. You keep tightening up, force the noose on tighter on McDonald's to make it perform. If it doesn't perform, you take a less and less loss or a smaller gain. I don't know where you got in, but it's called a time stop. You expected this thing to bounce. It is not bouncing at the moment. That's not a good sign. People will be quicker to bail out on it if it starts headed south. Yep. Chris is like, oh, great. Makes 8% or more in a month. I got to watch out for that to pull back all the way. I love it. You got a phone call set up in the morning. Love it. I saw it already. I'll be there. I'll be ready with you. The Folio website, very basic, and I like that. They have a more advanced one that I could flip the switch and everybody would see a more advanced one, but to me it's a little complicated, and it becomes this sort of look at all my bells and whistles. And at the end of the day, and I've had good track record with customers just being able to see what's going on, make decisions along the way with deposits or whatever, and not have to navigate all these graphs and charts and stuff. I'm old school that way. Just show me the data, right? I don't need the fancy graphs. I love it. Dustin, you ever study stocks that return the fastest after a dividend date? If you bought the low from the gap down, a quick return, I would get a profit without holding for days. I can't say I've done anything like that. That would be, there's a lot of variables there. I understand what you're trying to look for, but that'd be kind of tough. Maybe you could do it on a handful of stocks instead of saying any stock that happened to pull back a certain amount. I'm not sure how you pull that much data. That'd be a little bit of a chore. But could you? Yeah, you absolutely could. Yep. Emerging markets getting a little more attention. Yeah, emerging markets are kind of being presented as the potential outperformer next year. So a lot of people are starting to believe that narrative, and I think that's why you're seeing a little more action over there. A lot of settling dust overseas and stuff. So that could be the case there. We'll see. Yep. I love it. Nice. Did you guys split? Yeah, they probably did. Yeah, they did. Yep. Facebook we covered earlier. Not looking good for them in terms of maybe a little inquiry there. Department of Justice going to be coming after them. At least that's the headline today. We'll see what happens. Yep. Is Apple a good buy? So I can't say if a stock is a good buy or not. I'd get in a lot of trouble for that. But you can't argue with the performance of Apple. Makes it a little difficult to try to chase it at highs here, but yeah, you can't argue with how well it's done. I'll give you that. For it to be on your radar, at least for an opportunity, I wouldn't mind that. Put it on a watch list or something. Yeah. Lululemon. Yeah, that was the one I messed up yesterday. Beat on earnings. They guided earnings at the lower end of the range. That hurt them here in the short term. Down about 4% today. Is it going a little bit further? Today. Yeah, a couple dollars lower after the close. Yeah, just starting a little pullback there. When it pulls back, it's pretty volatile. That's a pretty volatile stock. When people take profits, they pull it back pretty quick on that. So I believe that kind of volatility there. What's my background? It's like TV studio. Is that what you mean? Or my background? I think you mean my back. Sorry. He's a bright guy today. That's me. North of the border. Yep. New to DIY investing. Always love the updates. I love it, man. Yeah, come to the class tonight. To remind you guys, our client class tonight's open to the public. We'll do a quick one back there over in the old speakeasy. So grab a drink, whatever your favorite drink is. Come hang out with me for a little bit. We always get right to the point, cover everything we need to cover, and then I'll take questions. So usually not too long of a class there. I love it. Cool. So the question is, would you create a custodial account versus using a Roth for kids? So I did a video on this in the past to say, well, you could use the custodial account that counts towards your financial aid and stuff, or could you sneak money into like a spousal Roth and somehow get away with that and still use that money without any penalty or anything for your child's education? So I just try to present that argument there. Could you though? Yeah, you sure could. Yep. Is it a green screen behind me? No. Later tonight we'll be over in the camera angle actually points into the bar there. So if you want to come back at 8 o'clock, you'll be able to see. It's not a green screen, although it does look hazy today for some reason. Not a green screen. This just happens to be our office. I love it. Are you able to rent your IRA still? Unfortunately, you got to be either in retirement or have a significant amount of money to do that. The reason for that is just the market pricing where it's at. We can't be diverse enough with prices where they're at because you can't do like fractional options and things like that. So, yeah, unfortunately, we don't really promote that too much. What's the financial background? I have a great bit of knowledge there. So for me, I'd always managed money in the past. Started the company just to kind of continue that for the average person. So I've always been sort of interested or in the markets there, and you know, it's just one of those things I like looking at every day. I did a video on my past, like going back to when I used to own a printing company and when I sold that and how I got into it and everything. Maybe we could do that one again, but I appreciate the compliment. I love it. All right. Hey, I'll see you guys later. A couple hours, 8 o'clock. We'll see you in the class there if you want to join us. If not, no big deal. It'll be recorded. You can come back as well, but we'll be live at 8 o'clock from the speakeasy behind us there. So, you know, I mean, I can grab a drink, but you grab a drink. We'll see you later. We'll have a good time, talk about some geeky stats there and try to help you guys maybe with something new and show you what we talk to our clients about here. So I hope to see you later. Enjoy the rest of your day. Until then, we'll talk to you later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.